Plug Power reported quarterly financial results on November 12, 2024, in yet another quarter where the loss on the bottom line exceeded the revenue number for the quarter. Plug Power has had a difficult going in recent years, I could say in recent decades. The company has struggled and found no traction overall. Out of the more than 100 companies that I follow and have ratings on, Plug Power was one of, let's say, a dozen or less that I've had a sell rating on in 2024. And hopefully you followed that recommendation, because Plug Power stock is down more than 58% year to date in 2024. In this video, I'll update that recommendation and let you know if I still think the stock is a sell or avoid, or if the company made enough improvement in the latest quarter to at least be removed from the bottom category of my list of stocks. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Plug Power reporting $174 million in revenue in the latest quarter, representing an inflection point in its electrolyzer developments. Still, the characteristics of the business do not make sense, with a net loss of $211 million in the third quarter of 2024, compared to a net loss of $262 million in the previous quarter. So if you compare the net loss, $211 million, to revenue of $174 million, the company is losing more on the bottom line than it's generating in revenue. So one of its biggest hopes is for more money from the government, because that's primarily the way it will survive and extend timelines to get to some point in the future where maybe the business can be on self-sustainable footing. Right now, that's nowhere in sight, so it needs more and more money from the government. The good news is that it is getting some money from the government. Plug continues to progress with the Department of Energy loan, which aims to support the expansion of its green hydrogen initiatives and infrastructure for up to 6 hydrogen sites. The company was awarded a $10 million DOE grant to lead development of advanced hydro refueling stations in Washington State in the third quarter of 2024. But $10 million is not going to move the needle for a company that lost over $200 million on the bottom line in the most recent quarter. Looking ahead, Plug anticipates for overall 2024 revenue to be in the range of $700 to $800 million, driven by a pipeline of orders in the electrolyzer, cryogenic, and material handling businesses in the second half of 2024. Despite the speed and development of the hydrogen economy continuing to impact hydrogen equipment deployments, the midterm and long-term outlook remains positive. So the company's been facing headwinds in the hydrogen market. It's just not growing at the rate that the company expected it to grow. And it's, even though the company's pricing its products at an introductory price point, that's leading to massive losses on the bottom line. The incoming administration in the United States, the Republican sweep of the House, Senate, and presidential branches, leads one to believe that the support for these green initiatives are going to be pulled back. We've already seen indications that the government is going to remove the subsidies for purchasing electric vehicles, and you might see more initiatives where they pull back spending on these green initiatives so that they can allocate more capital to tax cuts and other Republican interested party development lines. So it's not looking good for Plug Power from the government incentive perspective. And of course, it hasn't looked good for Plug Power just in terms of organic business demand for its products at the current price points. So if we look at the revenue line item in the most recent quarter, $174 million in revenue. That was down from $198 million, $199 million in revenue in the same quarter last year. So they're going backwards in terms of revenue. They're not growing revenue. They're actually experiencing a decrease in revenue. So if you keep losing money on the bottom line, that money has to come from somewhere. And unfortunately, that money is coming from investors like yourself and like me that might be interested in a green energy stock. Thankfully, I've avoided this investment, and hopefully you will have avoided this investment as well. But the company's diluted shares outstanding soared from 599 million in the same quarter last year to 858 million as of the most recent update. It's my estimate that the company will continue diluting shareholders, selling more and more shares to raise more and more capital to fund itself, to fund these losses on the bottom line, which are not expected to end anytime soon. They added over 250 million shares. They'll probably continue adding millions and millions of shares, diluting investors. And the reason that's bad is because if the company does ever reach profitability, which is a big if, that means the earnings per share will be lower because they'll need to be split among more shares. The company has made some improvement in its cash flow from operations. In the 9 months that ended September 30th last year, they lost 864 million negative in cash flow from operations. This year, in the 9 months that ended September 30th, their cash outflow was 597 million. So negative 597 million in 9 months, or roughly, you can think about it as $60 million per month is leaving this company through operations. So its operations are causing mass outflow of cash every month, close to negative 60 million in cash flow from operations, with no hope for this ending anytime soon. So what they need is just more money from the government to keep this company alive, to keep funding its operations, and hope that at one point in the future, things will turn around. As I highlighted earlier, the stock price is down 58% year to date in 2024, and I've rated this as a sell, so hopefully you followed that recommendation and avoided these huge losses. I've had this stock rated as a sell for a long time now. If we zoom out 3 years, it's down over 95% over these last 3 years, and I've cautioned investors that this was not a buy on the dip opportunity. So you could see here Plug Power had been rated as a sell. I last updated that recommendation on September 24th, and I'll remind everyone that I still think this is a stock to avoid right now in 2024. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.